Bell here at MarketStream.live. My name is Joseph Cusick with the Cusick Group. Securities offered by MoneyBlock, here to wrap up today's action. There's quite a bit of it. So let's start taking a look at the markets and how they finished the day. The Russell 2000, it was down about 0.7% at 1354.60. That led the downside. Those small cap, high beta stocks, they're looking very weak right now. Also taking a look at the Dow Jones, down about 0.3%, almost 0.4% at 19,887. Still cannot capture that ever elusive 20,000. The NASDAQ closed, though, above a big psychological hurdle, the 5,500 little hurdle, at 55.32, up almost 0.2%. And that was the silver lining today. With the S&P 500, though, finishing the day down about 0.3% at 2268.90. The action came on mixed volume. You had lighter volume on the New York Stock Exchange, 800 million shares traded versus an average daily volume of over 1 billion on a day like today. The NASDAQ, though, did have 1.8 billion versus on average 1.7 billion. Now, decliners continue to outpace advancers on both the New York and we saw that on the NASDAQ. We are seeing, though, new highs outpacing new lows. So we're not seeing a complete momentum to one side or the other right now, and it's very mixed action. Now, we did report on some earnings reports that came out this morning, and this is kicking off the season. We got to get prepared because at the end of the week, we're going to have some big-time financial heavyweights. The banks are going to be reporting on Friday. Acuity Brands, AYI, they came out down $34. Basically lost that right on the open at 202.51. You also saw Commercial Metals, CMC, down 179 at 2081. And you saw Global Payments, though, the silver lining today, up GPN at 79.79. That was up $5.34. Basically, the first two, Acuity and Commercial, came in. They're both top and bottom line estimates, as well as their actual earnings, came in terrible. Global Payments, though, was to the upside. And as a matter of fact, the reason why I even paid attention to Global Payments is I actually used one of their payment machines while I was in Canada. So it was pretty interesting that I was paying attention to that because of a product that I actually used of theirs. 8 out of the 11 sectors finished the trading day in negative territory. The energy sector led the way, down 1.5%, and that was the biggest laggard out of every one of those segments and sectors in the offensive sectors that I keep an eye on. It was an uphill battle for energy all day long. Crude oil opened up the day right away in negative territory. There is concern about both OPEC and non-OPEC nations actually sticking to the supply agreement and production agreements that they came to early in December. We warned about this. We knew that this was possibly, at the bare minimum, going to be a volatile situation at best. Plus, you're seeing that there's a recent growth with crude over $50 of U.S. production. That's ruffling some investors' feathers as well. So the commodity closed down about 3.8% lower at 51.94. We also saw some weakness in the laggards being in the financial sector. As I noted, the banks are going to be reporting this Friday, but the sector in general was being under pressure with the weakness in the dollar. There was also strength in bond prices. Yields came off. The financials were down 0.8%. Also, you had industrials coming off. Steel was under a lot of pressure. As a matter of fact, Steel, the stock, was down considerably, but the sector was down 0.7%. And rounding out all of the cyclical sectors was consumer discretionary, down 0.1%. Again, we're going to be watching all of the sales data and guidance that's coming out from other retailers as we come through. We did see a larger consumer credit number than it was anticipated. So that was a little bit of a positive as far as the consumer out there utilizing both revolving and non-revolving debt. But you saw that there was underachievement in these cyclical sectors. On the counter-cyclical side, though, 4 out of the 5 spaces finished also in the red, and that was a little bit of a disconcert for the market. Utilities finished and were leading to the downside in the countercyclical sector, down 1.3%. You also had the telecom services continue to be under pressure, down 1.1%. Consumer staples were down about 0.7%, and real estate was down about 0.6%. Now, the light, though, in the countercyclicals was healthcare, up 0.4%. The biggest driver of healthcare was the biotech sector. IBB finished the day up $3.72 at 284.07, a 1.4% increase. That was holding up the markets. You saw the likes of Amgen up $2.06 at 158.84. You also saw Biogen, BIIB, up $3.47 or $4 at 299.02, and Vertex Pharmaceuticals, VRTX, up 82.86, up 347. I mean, the bottom line is those three were the stalwarts of that particular sector, and that held up the healthcare sector. The top-weighted sector, though, is the tech sector. Did absolutely unbelievably well today, in spite of all the other action that we've seen that's been slightly negative. The sector in general was up 0.3%. You saw the darlings, the big caps, really leading the way. Apple settling at a 52-week high at 118.99, up a 108, and that's in spite of the fact that they've had disappointing sales on their iPhones. Also, this was the 10-year anniversary of the announcement of the iPhone in 2007. You also see that the chip makers were also in the lead. The Philly Semiconductor Index, SMH, was also up about 1.1%. You've seen that chips have been on the move. NVIDIA, the most notable one. You're also seeing that the metals, specifically silver, we talked about this in Strategy Now, SIL was up big this time today, and that could be one of the catalysts for the chip sector. Taking a look at the U.S. Treasury market, there was some disappointment from the perspective of yield hounds. The 10-year yield finished the day down 5 basis points at 2.37%. We saw that action actually being flagged when we saw that the global bond markets were starting to pull off as far as yields were concerned. And we saw that early. We talked about that when we were talking about the European Open at 8:45 Eastern time this morning. We'll do the same tomorrow. We also saw that the U.S. dollar index has pulled off pretty dramatically, taking the pressure off of world currencies. The index went out at 101.95, down 22 cents, or around down 0.2%. That also took the pressure off of the precious metals area, not only in silver but in gold. Gold was up about 0.8%, finishing off at its best levels at 11.83 per ounce. So there was some movement there in the precious metals that also benefited the miners. GDXJ, we discussed that as well in Strategy Now and on the opening bell, as well as GDX and GG and other gold-based products. All right, folks, that's it for the closing bell right now. Join us tomorrow morning. We're going to start off bright and early, 8:30 Eastern Time, 7:30 Central. We're going to go over Asia. Then at 8:45, we will cover all the action in Europe. And then at 9:30 Eastern Time, we will then do the opening market bell here in the U.S. So join us. And also take a look at our archives. We got some new and cool stuff coming out in the premium section. Keep an eye on that. And we will see you tomorrow here at MarketStream.live. Have a great night.